Yo, welcome back to the Majesty Mentorship. This is lesson 3 of 15. So we still have like 12 lessons left, and then if you're here to watch our previous video, do so to watch them because this is just like the continuation of it. So in this lesson we're going to be discussing about break of structure. Some people call it break in market structure. It all depends, it's the same thing. So we are going to go into the video right now. So what is break of structure? A break of structures occur when the price closes above or below a swing high or low. Generally, every trader should trade in the direction of higher time frame. You understand? So if price is going towards the direction, it has to break a particular swing high or a swing low. So that is just like a break of structure, and then we have different type of break of structure. But let me just give you a graph of it, like path line. So if you check this path line here, you can see we have price was coming down and the price was going up. This is just like a market structure for like a bearish and bullish direction. Then you can see you have break of structure all over everywhere. So you can just picture the path graph, let me call it path graph. So that is just it. And then we have three types of break of structure that we are going to go into. So you are going to use the three type of break of structure to explain this path diagram here. The three type of break of structure we have market structure in bullish condition, market structure in bearish condition, and market structure in opposite direction. So you're going to be discussing about all these things one after the other, so for better understanding. And then after that we go into the practical aspect to show you guys on how it works on real chart. Market structure in bullish condition. The bullish market is characterized by making higher highs and higher lows. But this characterization is not enough. It's necessary to say that bullish market are always breaking swing high and also respecting swing low. So you can see this path diagram that I draw here. Price was going all the way bullish, and then you can see it's respecting every previous swing low. Price is not going below the previous swing low, but price is breaking every previous swing high. So that is break of structure to market condition in bullish condition. So if price is going up, it has to be breaking every previous swing high and also respecting every previous swing low. We discussed about this when we are discussing about expansion and retracement. That is our first lesson, so I'm not going to go into the deeps like the law and everything. So if you're here to watch that video, you do so to watch it because I mentioned the rules to it. So let's discuss about market structure in bearish condition. Market structure in bearish condition. The bearish market is characterized by making lower lows and lower highs, but this characterization is not enough. It's necessary to say that bearish markets are always breaking swing lows and respecting swing high. So every single time price is coming down, price have to be breaking the previous swing low, but it's going to be respecting the previous swing high. We discussed this also when we are discussing about expansion or retracement. You understand? So that's just it. So every single time price going towards the direction is going down, it has to be breaking every previous swing low and also have to be respecting every previous swing high. So let's discuss about market structure in opposite direction. So the first one we discussed, the first two type of break of structure we have discussed, it's a break of structure to the same direction. Why this market structure in opposite direction is a break of structure to opposite direction. Hope you guys understand it. So let's discuss about market structure in opposite direction. Market structure in opposite direction, it's when the markets go above or below a respected swing level. It's a way in which banks, external traders, smart money communicate with each other on change of direction. Like the previous two type we discussed is like price is going to be respecting a particular swing. You understand? But this one, it's when price break a respected swing. So we have a break of structure to opposite direction. Majorly, this is what forex trader calls a break of structure majorly in the market. So mostly they always use only this one. It can be like to the upside direction or bearish direction, that is bullish or bearish. So that is just it. So you can see the path line, price was going all the way bearish before, and then after that price change direction going up. Price was expecting every previous swing high. Then you can see price end up breaking that respected swing high. That's what we are. That is when we are break of structure in opposite direction. So it can be for bullish or bearish. It all depends, but it's just like necessary for you to understand the rule to it. So that's just it. So we are going to go into the practical aspect right now, and then I'm going to show you guys all these on chart so you can understand it much better. So this is the practical aspect right now. We discussed about break of structure, and then I gave you guys three type of break of structure, which are market structure in bullish condition, market structure in bearish condition, and also market structure in opposite direction. So I'm going to like to be showing you guys on shout how to identify them. Please do wait to subscribe right now. Please do that right now for me. That's the only way you can be encouraging me to be doing more of this video. And also like this video so that YouTube can push it out to more audience who are interested in learning institutional trading concepts. And also, if you are yet to watch our previous lesson, please do so to watch it for better understanding, because this is just like the continuation of them, you understand. So that's for that. So we're going to like to start from market structure in bearish direction. So if you study this market right now, you can see that price was doing what, price was coming down all the way. Can you see the movement? So you have to understand, you have to study what actually happened in the market and then the reason why price was coming down. So you have to understand them. As an institutional trader, we study the market, you know the reason why price is the way it's doing. We don't just enter into the trade anyhow. So you have reason that is backing up every single action that price does. So that is just it. So if you study the market right now, let me just draw the power lines so you can see the direction. We have then before that we discussed about market structure in bearish condition always from swing high and also swing low, but price is going to like to be respecting every pure swing high and also is going to be taking every pure swing low. So you can see that price was coming down all the way. Then we have swing low here, then we have swing high here, then we have another swing low, then we have another swing high, we have another swing low, then we have another swing high, then we have another was swing low, then we have another swing high, then we have another was swing low. So this moment right now is just like market structure in bearish condition. So every single time price is coming down, we discussed about this in our first video, which is under expansion and retracement. So right now we are going into the pro aspect. Hope you guys notice that I'm not saying expansion and retracement in this video. You understand? So I'm calling like swing. So every single time price is going bearish, so price out to be taking every pure swing low, and also price out to be respecting every previous swing high. You can see that price here is not going up. This swing high here is not going above this previous swing high, and also this swing high is not going above this previous swing high, and also this swing high is not going above this swing high, and also this swing high is not going above this swing high. But all the swing low, price out to go below the swing low. You can see that this swing low is going below this, and also this swing low is going below this. This swing low is going below this, and also this swing low is going below this. So for better understanding, if you are here to watch our first lesson on expansion and retracement, please do so to watch it on element to trade setup. Sorry, that is the topic, element to trade setup. So please do so to watch it for better understanding. So you can see that when price was coming down, price is breaking all this swing low. Every single time price break this swing low is called break of structure to the same direction. So we have break of structure. We have three type of break of structure. I mentioned that in the theory aspect. The first two is break of structure to the same direction, while the last one is break of structure to opposite direction, and that is what major trader call break of structure. You understand? So that is just it. So you have a break of structure here, then you have another what break of structure here. So every single time you see break of structure in the market, you're like price still have the tendency of still going towards that direction. So that's just it. So we have a break of structure here, then we have another break of structure here. So you have to understand all these things in the market. Then every single time price break is structure, a swing low, and then it's going bearish direction, just know that the high that formed that swing low, price is going to respect it no matter what. So that's just it for market structure in bearish condition. So just a little recap: every single time that price is going on bearish direction, price outright to be taking every previous swing low and also respecting every previous swing high. So you should just know this and then add this in your notes. So that is just it for this. And also let's go to like market structure in bullish condition. So let me just use this place right now. You can see that price was going all the way up from this level to this high. Let me delete this. Okay, so you can see that price was going all the way bullish from this moment, and then every single time price is going all the way bullish, price out to like to be respecting. Okay, let me just draw the path line for understanding. So we have swing high, then swing low, then swing high, then swing low, swing high, then swing low, then we have another swing high, then we have another swing low, then we have another swing high. So let me just stop here. So every single time that price is going towards the direction, it has to be taking every previous swing high, and also price has to be respecting every previous swing low. That is for market structure in bullish condition. So no matter what, you are not expecting price to go below the swing low if price is going what all the way bullish. So that is just it for that. So and then price have to be taking every previous swing high. So note that, and also don't forget this. And also, if you talk about break of structure in opposite direction, that is the main one, and then that is the main thing that people call break of structure. So I'm going to explain that in details. So right now, you can see that price was going all the way bearish before changing direction to bullish. How the price change direction? In our first lesson, we discussed about, no, I think yes, reversal. In our first lesson, we discussed about something like a reversal. You can see that price respect this swing high. Consider price sorry, consider from the moment here we have swing low, swing high, swing low, swing high, swing low, then swing high, swing. So price respect this swing high, then you're expecting price to respect this swing high, but you see that price is not respecting what this swing high here. Price end up breaking it. So every single time this happen in the market, you have what? Break or structure to opposite direction. That is BOS. So break or structure towards opposite direction. Then we are expecting price to come down all the way down. After that, it's going to like to start going up. So in our next video, we are going to discuss about where price always retrace to before going to the real direction. So I'm not going to discuss about that in this video. So my main point is just like to see this break or structure that every single time break or structure happen to the opposite direction, it's just like a system of which banks are using to communicate with banks that we are no more going to the position direction we are going to before, so we have to change direction. So you also, as an institutional trader, you have to understand all this language on the chart. Understand? So every single time you see this break or structure to the opposite direction, just know that price was going opposite direction. So price not going to the direction that price was moving before, so price have to change direction. It can be also for like a bearish trend. Let me see, maybe I have a bearish trend there. So just like vice versa for this, so I don't want to take the video long, I don't want the video to be long. So just like vice versa for this, just imagine you turning this chart upside down, you understand? So that's just for that. So every single time you see this occur in the market, like break or structure to opposite direction, then we are just expecting price to form a little retracement. Then after the retracement, price have to move towards that direction. So as an institutional trader, we are not expecting price to go below this swing low. Can you see? This swing low, we are not expecting price to go below it, and then this swing low also, we are not expecting price to go below it. We call it higher low, and then this higher low, this higher high, higher low, higher high, higher low, then higher high, higher low is very little, but price still have to respect it. Then higher high, higher low. So that's just for that. So add this in your mind, and also if you have any question concerning this, you can ask me in the comment section. And also don't forget to subscribe to this channel and then turn up your notification, and also share this video with your friends and family that you want them to understand this institutional trading concept. I'm actually doing this for free, I'm not charging any money for this. So the only thing you can do for me to encourage me is like to subscribe, like the video, and also you can comment. So YouTube algorithm is going to like to push the video to people that are interested watching and learning institutional trading concept. So see you guys in my next video. Thank you for doing this for me. I love you guys. We all meet at the top.